Good morning. Happy Monday. All righty. So I think it's going to be a boring day. I think it's going to be a consolidation day. And we'll, of course, see how it turns out. It's just that things ran up over the short term. Uh, Boring could be good. You had this initial push up and the bullish price action here where it went sideways. We're looking at the futures here. And then the continued move higher. And most of the Friday happened at the end of the day, that last hour, all of a sudden the market woke up. A lot of last week was a lot of running in place, other than, initial gap up on Monday, which is more evident in looking at SPX and SPY. Because, well, you see the gap here, but you get more of the of course, the pre-market and after trading, looking at the futures. But so, prices were able to close above 4,100, and, it's 4,200 on the cards this week. The week before was above 4,000. And so you got a pretty quick run, and prices, pushed away from support, pushed away from the moving averages. There's a chart of the week that I wrote about that. You may want to take a peek at it. It's a good way to looking at anything. So we're starting off with like an inside day, and it may just end that way, and I just normal after a run that you get some chopping around. I think the worst thing from an intermediate term perspective for longs would be for this to continue to push higher without any kind of retracement or sideways price action. So we'll see. There's been a lot of overlapping chop and so on. And, when prices run like that, it could be the end of the move. Now, the weekly chart, it's got this long consolidation. So that is still bullish, of course. I mean, this is bullish. The concern is the extension away from price support, which opens up the door to larger pullbacks. So I think if this had another week like last week, the probability of pulling in at that point is very, very high. So let's take a look at SPY. And see, there you can see the range expansion bar on Friday. And, the move that came at the end of the day, better on the 15-minute chart, you could just see how it was kind of, it's the beginning of the day there. Chop, 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 little grind higher, and then just explodes into the close. And you have to figure the expectation is people that are buying that aggressively on a Friday, pent up demand, and you have to assume they have to get in, right? It's like they have the money and they have to get in, right? Why commit on a Friday like that? And so they're not going away. They'll buy the dip, and but this has created a void below. And so this area right here becomes a really key area now. Short term, I hope I didn't crash that. Anyway, I'm not going to pull it up. There you go. I don't know what's going on. Grab these horizontal lines and just signal. Oh, let's get it reopened here. It's a Monday. I don't know. Anyway, that congestion area from last week is going to be a key area. So when prices go sideways like that after a run up and creates that support, it's that bullish price action is one in which the expectation is it's not coming down there again in the short term, and it's going to run higher. Yeah, you'll see it in a second. McGraw, signal takes a a minute to load up. It'll just pop and fill your screen in a second. It is kind of annoying, but that's the way it's always been to load like this. Okay. So let's switch to the cues anyway. I was going to the spiders, and this congestion here, becomes a key area not to fall back down below. And you can see, the sideways price action. And these kind of momentum moves are power, of course, strong demand, but they leave no support underneath. So that needs to continue, and so far it has. So any failure could result in a sizable move lower. Now, before it even gets to something, you can set an alert there, but Friday's low becomes our first key reference point of support. And the factory work says, hey, since this is a range expansion bar compared to these, ideally, if it is a boring type of a day, it stays or closes, the opens and closes are in the upper half of the bar. So far it is. We'll just see how it plays out by the end of the day. SPX, I didn't even get a chance to look at the premiums yet, but I would say if there's any juice down in this area, definitely below Thursday's low, look there. And as far as the upside, just start looking at the strikes and go higher and higher and higher until you don't see that there's any premium, and then start backing away and see if that's your comfort level. So going back to how they ran up at the end of the day. So I haven't adjusted this here. Going below here. Hold on a second. And 40, 80, 40, 90. Wow, there's no premium down below here. So that's interesting. And it's just not worth it on the upside. We'll go up to 4150. And after that kind of a run, 4150. 65 by 80. And yeah, get a good side. Well, compared to what's around it, open interest. 4125 for Wednesday. Well, not me. Too close to the danger. Okay. There you go. So look, running in place. There's the end of the day there. There's Friday right up into the prior resistance. Just common sense. A little bit of a resting day is what this market needs to push higher. So this level here, it cannot go down below that or close below it, because the expectation is that this is, demand is going to continue. And so any kind of chopping around and then it's going to go higher. So, down below here, all bets are off for that. And Dow, little consolidation. I just stalled up there. Again, I have to push this up to wherever. It really doesn't matter because there's nothing up above as far as resistance. But, you could see this is what I wrote about in the chart of the week. Look at how close the moving averages are. Get further apart, further apart, further apart. And now if prices begin to accelerate away from the 20, I mean, we call them visual aids, but come on, how high can it go without a retracement? Now, obviously higher than we would probably think makes sense, but as it does bar by bar analysis, once it trades and closes below a prior bar's low on a daily chart, the greater the probability when it's extended like this that it's going to come in, a considerable amount. Right? So SPX, you can see the distance there, that is more vulnerable to a pullback than the Dow is. The Dow's been slowed down, and you see the Qs here. Look at the distance. So if we were to get a red bar today closing below that bar, we'd all know what that would mean. Right. All right, Russell. Right. It just can't get out of its own way. Last week we talked about the possibility of a head and shoulders type of a top. You can see it's tightening up here, coming up a little bit here, but within Friday's range. So more running in place. Bonds are down here a little bit, but just kind of hanging out at the lows. They're not bouncing much here. So if they they got a pivot. So they created resistance, they created support. That's what's called a trading range. And so you want to set an alert down below here to see if they start to drop, because that's going to get the attention of the markets. Now, it depends on how fast they drop, of course. The 10-year, pivots, trading range, same story going on there. And what's the 10-year? Just sideways. So you don't have the futures, you could use TNX, you could use TBT to see if these are moving higher. Silver and gold, right, up against the 50, and was able to peekaboo above that pivot. So I'll be watching to see if this begins to pull back here. Yeah. GDX, right? See if this begins to roll over and see a high point above here, kind of rolling over there. GDX showed relative strength, right? These are the miners where it made the higher low and higher high, but that's up into resistance as well. But beginning to make the turn. The weekly looks, better. Does have the look of a bear type of a flag. We know the monthly's in an uptrend. So, interesting to see what it does this week. And crude oil, just chopping back and forth. But, energy was the one loser last week. Well, there was some others, but energy was down in a week where almost everything was up. So watch this. You can see where it is here, 48.60. It's turning up. So I want to see if this could actually hold on and get a green day here. The price of near term versus. Yeah, McGraw, that's kind of futures. People look at futures and say, what is the current month versus the future months, and what do they say, and the implications of being more bullish or vice versa. Yeah. Okay. Internals, they still have not hit that upper band. Sentiment hasn't hit that upper band. You can see breadth is just kind of peekabooed above 100 there. And as the week kind of just lost steam except for the last hour of the day, that did nothing. And while this is historically at a very bearish level, this data has just been so skewed to the call side that what we're looking for is to see if this does accelerate higher this week, that this moving average would tag those upper bands while breadth moves up. And so you could see breadth was pretty anemic almost all of last week. But other than the gap up on Monday and then the last hour running higher, it was a lot of boring running in place almost all week. So I think that kind of is in alignment with that. So, all yours, Dan.
Good morning, everyone. Yeah, I actually was expecting a gap up today just because we're still in that mode of market just wants to go up, 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 up. And I don't know why it's down. I saw some news things about Powell being on 60 Minutes. Maybe that had something to do with it. But we're holding fine pre-market here. You can see with this end of day run though, 40% retracement, but still a price void. All our opens, I have a number of things pulling in here with the gap down, but none of my alarms are going off. We actually have an up alarm, Myrna. We did a put spread Friday. So that's gapping up, looks good. A couple here on my list that I sent a telegram, Uber, a gap breakout. I like that a lot. 30-minute high, maybe some type of pullback. Mr. MSTR bottoming pattern. There's still no something action, but today could be that. Remember last Wednesday, bottoming patterns, fantastic session. So now if we're gapping up over this becomes support, 30-minute high. So bottoming pattern. And then finally BABA. This is such a great example. Great example of it depends what the market had priced in. Because I think the headline said they're paying a $2.8 billion fine. So when you see that, you think, oh my gosh, this thing's going to be gapping down. Well, you see it's not. It's a bullish gap over this. So now this is the something day, just like MSTR, and it's a shock pattern. So that's what the MT Live is going to be on this Wednesday, the shock patterns. So these are all examples of gap shocks. Yeah, Dallas, I had looked at him in the past. McGraw and I did a couple weeks ago. The problem is he's usually very spready. But definitely we will keep an eye on him today. Jose and Zim. Yeah, it's a 1, 2, 3 all-time highs with a bullish 15. Sure, I like it. And Greg did the chart of the week on moving averages and overbought. And this one is not that far from the 20 MA, and it's at all-time highs. So I actually like that a lot. I'm putting that in a window on my other computer. You asked about GDX. 34. There's just no pattern to me. It rallied to resistance. It's gap into the middle of the bar. There's nothing of interest to me there. SU sub N. Yeah. Yeah. You know what? This one reminds me of aluminum. I like aluminum better just because it's not as extended. You see this? That was a nice bullish gap to resistance. It came in somewhat calmly and reversed right where it needed to, and then a bottoming tail. I'm going to put that in a window. That looks great. I'll stay, swing long. Yeah, over the highs. Let's continue with my list here. It's creating like a big mess, but you see it gapping up. Never mind. That looks like somebody's toy. Bottoming pattern, right? That looked like the bottom was going to fall out. That's a bearish consolidation at the 200. And I mean, this looked like a Reddit toy to me, totally. That's their playbook. Um, so maybe it's a Reddit toy today, but it's another shock pattern. It's gapping up, so that could be worth watching. New on here, Microsoft's buying them for 56. Microsoft didn't phase them. This thing's been on a tear. I mean, a lot of the fangs have had crazy runs. Um, yeah, it's making it harder. I made it very clear in the letters that I had a hard time finding bearish setups. I have a few here. I'll show you if I have time. But otherwise, a lot of bullish patterns, but it's, risk is rising. They're getting extended. Yeah, that definitely, Debbie. Yeah, we got earnings season kicking off with the big banks. Absolutely, that could put things in a bad mood. Region here, I just saw somebody talking on CNBC. Another bottoming pattern, but it really has to get over Thursday's high, where I have no interest. Shade 23, so another gapper, but that one, the gap's too big for my reward to risk. We have Playboy up again. I don't know what got that going last week. The gap in here to 29. I'd prefer it to kind of go all the way to 32 and then maybe see if we can get a double top. Or pot stocks, I don't know what, it has to be news because they're getting creamed again today. Remember I said in the green room a couple days ago, I said this poor thing looks to me like it wants to go 15 bucks. So that obviously is going to hurt MJ, ETF, AFA. It's another big one. I saw that one gapping down. Messy sector. Thomas, Intel, Cisco, Qualcomm. You like NASDAQ stocks. Robin's saying AFA had bad earnings. Robin, if you can change your drop down for us. Yeah, Intel, we looked at it on Friday and I liked it. Thursday and Friday, actually. It looks higher, like with everything, market overbought. I'm going to be very particular on new trades. And since the market's gapping down, our new trades should be fine if they trigger, but we'll obviously look at them one by one. Cisco, it's just bullish consolidation. I like that it's negating the pre-market pre-markets. Ah, Robin. Now, thank you, Robin. That makes sense. Half of bad earnings merging with Tilray. That's what's dragging it down. Qualcomm, we have in our weekend letter. It looks fantastic. Let's see. I don't like taking weekend risks unless the odds just look overwhelming that we're going to have follow through in that direction. And to me, I don't know, with it so extended, my point is I was waiting on this, but over Friday's high looks fantastic. And it's another example where I like the gap down, because then if it triggers, it's going to have to negate this morning gap down. We're gonna do both the put spread and I think I said either buy a call or stock. I gotta look. Well, Debbie, remember a sell setup is a rally and reversal in a downtrend. There's really, there's not many downtrends. All right, now alarm going off. Estee Lauder, we never trade in the first 5 minutes, so even if an alarm goes off, it will be 5 minute high. But Estee Lauder looks fine. We're already in. Oh no, we closed our put spread for a dime last week. So this is a new directional trade. All right, but 5 minute high, Estee Lauder's fine. Tyson alarm went off. 5 minute high is fine. So I'm gonna go ahead and text that. Just give them the green light right now. They both look great. They triggered. Pelletier. Yeah, bottoming pattern.